Nifty has crossed 13,000 levels for the first time in its history, while Sensex is at 44,500 levels. In fact, Nifty has climbed 73% in the last 8 months. A look at Nifty 500 suggests that all the sectors participated in this rally, and as many as 97% of the stocks have given positive returns, while 94% of the stocks have given double-digit returns since March lows. More than 300 stocks have given a gains of 50% or more, while precisely 141 stocks have given a gains of 100% to 700% in the past 8 months. So is it a right time to buy? And should you invest now? Let's find out. Hello everyone, this is Mayur Gupta here, and today we will talk about 5 reasons why Indian markets are at all-time high and what we should do now. Should we buy, hold, or sell our holdings? So let's start with the reasons first. What are the concrete reasons why this rally has happened? So number one reason is vaccine development. Consistently good news around this vaccine development clearly boosted the market sentiments and raised hopes for early COVID vaccine. Many companies like Pfizer, Moderna, AstraZeneca, they are in a fairly decent stage of vaccine development, which in turn is giving hopes to the investors that the good times are yet to come, which is giving hope for recovery and boosting market sentiments. Second reason is global rally. Globally, markets have climbed on this news of vaccine, and if you see major indices of countries like Japan, which was up about 2.5%, Australia around 1.26%, South Korea around 0.5%, while US markets also closed on a higher note and were up around 1% a day ago. So basically this global rally is also contributing to the sentiments of Indian shareholders, and hence Indian markets are also going up. Third reason is FII inflows. So foreign institutional investors, as we all know, they play a huge role in Indian equity market. In November month alone, they have invested around 51,000 crore rupees in Indian equity market, which is the highest ever FII inflow in the history of Indian equity market. Although DIIs were selling in this time and were booking profits, but overall in net there was an inflow in the Indian equity market, which was a major reason for this boost. Fourth reason is the sectoral rally. So if you see in the past 7-8 months, there are many sectors which has contributed to this Nifty upward movement. And if you will see sectors like banks and IT have particularly helped Nifty to reach this significant heights. And on this fateful day of 24th November 2020, 3 sectors have majorly contributed to this Nifty touchdown of 13,000. So if you'll see, Nifty banks were up around 2%, Nifty auto was up around 1.75%, while financial services was up around 1.3%. And as we know that Nifty has so many banks and IT companies as part of its core, hence rally in these particular sectors has helped Nifty to reach newer heights. The fifth reason is more of a psychological reason, and that is FOMO, fear of missing out. People want to participate in this post-lockdown and pre-vaccine rally, and they don't want to miss out any opportunity which is provided by the market. Hence Nifty is going up rapidly. Though one thing to note here, which is of relevance, is that India's market cap to GDP ratio, which is also called Warren Buffett indicator, have reached 80%, which is a sign of overvaluation. And why I say this 80% is a sign of overvaluation? Because India is a country where half of the economy is not listed on the stock exchange at all. So some 5,000 businesses are representing 80% of the India's total GDP. Because there are so many small companies which are not even part of the exchanges, but still they have a market cap, they have some value. And if you add all those businesses and their values and then compare it to the total GDP of the country, this 80% number will be way more high. It will not be 80%, in fact it will be around 150 or 160%. So then in that case, all those listed companies which we are seeing now are way more overvalued because it is covering 80% of the overall GDP as of today. And also if you will see the long-term averages of the country, it was around 75% or below. In contrast, this number was around 56% in March 2020. So this number has multiplied by 1.5 times in the past 7-8 months itself. So what we should do now? Should we invest, or should we wait, or should we sell our securities? So in my opinion, we should not take any long-term position at the moment. If you want to buy and hold it for trading purpose, yes, go ahead, select some securities, you can do that. But for long term, if you want to invest for 5 to 10 years, do not take any position now. Rather wait for market corrections, because Hopefully there will be some corrections going ahead. So at the moment we have to be patient, preserve some cash, keep around 20-30% cash in your portfolio. So when the markets will correct and when the market will present itself with some opportunity, you will have enough cash at hand so that you can invest at much lower prices. So that's it for today. All the best with your investing. Thanks a lot for watching this video, and if you like my content, please like, share and subscribe to my channel, and do let me know your feedback in comments. Thanks a lot.